Hey, everybody. Welcome to the morning market briefing. It's Friday, July 31st, 2026. It is August Eve, Ben. We got TK in the booth after the issues we had yesterday with sound quality. And by that, I mean no sound for the opening of the call. We promptly removed super producer Hicks. We've got Thomas Klecker running the show.
We removed him from the state.
Yep. He is long gone. Got him out of here, deported. So hopefully things are running smoothly. If you can't hear, I guess let us know and we'll fire Thomas. But Ben, U.S. says they're making a deal with Hamas. I'm sure this will go well.
Yeah, I did not have this on the bingo card today. Yeah, Hamas, famously not Iran. But apparently Hamas saying that if Israel gets out of Gaza, they will disarm.
Yeah.
And lose power in Gaza. So Hamas will. And that's what they've said. But it's kind of like, yeah, we'll definitely step down.
When you leave, we'll leave.
Yeah.
Yeah.
Yeah, we'll see how that works. And then it'll be, well, we can't leave because then it'll be a power vacuum. So we'll stay for the greater good.
Yeah.
Not that we want to, but I guess we'll do it.
So a Hamas negotiator has said that the group has agreed to store weapons under a transitional committee contingent on Israel ending military operations as part of a 15-point deal
that Israel
to get Israel out.
That Israel has not signed off on.
So that's your Middle Eastern development for the day. Let's jump in, though, to the real meat of the show. Yesterday we had Meta and Microsoft really driving the market in two very disparate directions. Looks like we're getting the same thing today. Apple down 6%, Amazon up 9%. So we've moved from the M's to the A's. But can't say that I'm shocked that Apple struggled here.
They've done really well year to date, and Amazon hasn't done as well year to date. And, I don't think this is the death knell for Apple by any means. They basically... So a couple things going on for Apple, big headlines, and I kind of want to talk a little bit more thematically about what we're seeing. But headlines are, they didn't expect demand to be so strong for the iPhone. They ordered fewer chips than they needed. And this is not memory chips. This is like the high-end, leading-edge Apple silicon chips. They didn't order enough. And so now they're scrambling to get enough chips to put in the iPhones and ship them. So that's pressuring things a bit. And then on the margin side, they are getting hit by memory, but they're looking at a lot of other options and how to achieve that, evaluating all options, they said. So I'll come back to that. But basically the headline is revenue guidance was lower because they can't get the chips because they didn't order enough.
Yep.
And then, which is interesting from Apple because usually operationally they're so good. Amazon, on the other hand, though, performed exceptionally well. They accelerated growth in Amazon Web Services. I think the biggest takeaway from me was what Andy Jassy said on his conference call, and that was he outlined better than anyone has yet the return on investment in data center. He said, look, we've got to stand up data center facilities, and that takes about 2 years to get the facility there, and then we got to get the networking and the chips and the hardware into the facility. That actually only takes 3 months. By the time we actually do that, we have a really good indication on how much demand there is out there. So we actually have a lot more flexibility than people think with these data center expenditures, and it's just all happening at once. They're doing so many data centers simultaneously, and we're in that 2-year lag period right now. And he said, but here are the economics. He says, once you start revenue, so if you start building the data center in year -2,
yep,
and you turn on revenue and you install everything and turn on revenue in year 0, year 3, you've paid everything back.
Wow.
And the useful life for a lot of these chips is 5 to 6 years.
Yep.
He says, so the returns are just really, really good. Free cash flow really turns on well. And more than that, they said that based on their experience with the cloud business and even with AI, what you can do is actually extend the useful life of those chips beyond what they're assuming. And you can also increase the productivity of those chips in the first years and actually accelerate that payback period to maybe 2 years, in which case by year 3, you're free rolling.
Yep.
So that's how the economics of this work. He is exceptionally bullish on it. Right now, they're a $170 billion run rate business. He thinks that they have line of sight to getting to potentially $1 trillion run rate business. And if you work out the free cash flow on that, I mean, it's just
insane.
Crazy. Yeah. So, but he said all that in the prepared remarks. He knew what the hit was on Amazon, and he addressed it, and he had the numbers to back it up. So a solid quarter, a better call even than the quarter, and that's why you see these guys going in different directions. So that's what I saw from the quarters. The bigger takeaway is it kind of gets back to this whole inflation discussion that we've been having on the supply side. Is the supply response going to be there? And I think what we've seen from Meta and from Microsoft and from Amazon is that on the cloud side, they are doing everything they can to squeeze every ounce of revenue producing material from these GPUs, which means running those GPUs much more efficiently and getting more tokens per unit of compute, getting more output per unit of energy, and getting more densification of memory. And so what they're doing is their goal is to lower that cost, because if the cost of AI is high, you're not going to be able to service as much demand. So their whole goal, their reason to be, is to lower the cost down. And so you've got some of the most powerful companies on earth trying to do that. And then you have Micron trying to keep the prices high. And then Apple, of course, on the memory chip side is looking at exhausting all options to get memory chip costs down. So I would not want to be Micron right now.
Yeah.
I mean, I think
you're on stilts and Apple's coming.
Yeah. There's a it's what Nassim Taleb likes to talk about is a very fragile situation. You're dancing at the party, but there's a sword hanging right over your head the entire time. And at any moment, it's going to come.
We've all been there,
down. And so that's what you are doing if you're Micron right now. And if you're Amazon and Microsoft or Meta or Apple, I think the returns on your investment are just going to increase, which make them, I think, a compelling investment here.
Yeah. We got a good old-fashioned fund blow up with the situational awareness fund. Not so situationally aware here. Ben, walk us through how this went down. I will say it was incredibly fascinating watching the Twitter coverage of this.
Yeah, and I confess, I mean, this is something that I like to try to be aware of, these fund blowups as they're happening in real time, so you can kind of maneuver against it. But this was actually fairly well hidden. I think that there must have been a few brokers and people who were issuing the margin calls who knew what was going on. And I think it kind of metastasized and caused a lot of the craziness in semiconductors and everything that we've seen the last few days. Basically, the Situational Awareness Fund was started by a guy who was a former OpenAI researcher, and he used 4x leverage in his hedge fund.
That's how you do it.
And it's an AI hedge fund.
I would say 4x leverage is usually a crucial component or something like that in reflection of how the fund blew up.
I mean, that would be like leveraging your stock portfolio the same way you leverage your house.
Yep. Yeah. Like I'm gonna put a little bit down.
I'm gonna put 25% down, and the rest is gonna be on to borrow it. And so, I mean, they did exceptionally well, obviously, over the last 2 years. But then it all started to unravel, and it unraveled very quickly. He was getting margin calls. He was forced to sell. And then it all kind of blew up yesterday. And Ken Griffin, the guy who has that house.
He's always watching.
That Mamdani called out in that video from a couple months ago in New York City. He was like, you know what? I'll take these positions off your hands, Mr. Leopold Aschenbrenner.
So he bought the entire publicly traded stock portfolio.
Yep.
At lows.
Yep. So that fund is actually still around because they have a lot of private investments. But yeah, the public investments are all part of Citadel now. So and this caused a lot of the volatility. So over the last, from Monday through Wednesday, when semiconductor stocks were getting smashed and software stocks were ripping, it was the unwind of this fund. And then yesterday, when everyone realized that this fund unwind is no longer happening, people are like, oh, well, I'm okay to buy semiconductor stocks now, and I'm okay to sell software stocks now. And I think that a lot of the movements that you've seen in the markets over the last 4 days have just been hedge fund maneuvering. And I think that it's probably something that it would be wrong to look into in too great a detail. And it's kind of frustrating in some respects because I think it very much pollutes any of the signals that we're getting from companies reporting earnings and the Fed and all sorts of things.
Yeah, there was plenty going on without this.
So it's interesting. I don't know, Andrew, where you can get 4x leverage on your.
Yeah, it's pretty impressive. I mean, I would imagine that, did they start there? Like, that's the thing I wonder. Because, I mean, surely not. Surely anyone willing to take that risk and be in a spot where they're later making margin calls is wanting to see some performance. So it'd be interesting to see the leverage they had at the origin or at the onset.
Yeah, and I wonder if you get there with options or something like that. It's fascinating story, but it does have impacts on markets and on investment portfolios.
And Ken Griffin wins again. Yeah, I mean, he bought at the lows and then half this stuff bounced right back.
Yep.
So pretty crazy. Wall Street Journal is reporting that Tesla is going to spin off its China business ahead of SpaceX purchase, but Elon says, no, we're not. So.
Yeah, I mean, I do think the SpaceX purchase of Tesla is going to happen at some point. I wonder if you have to get the lockup, all the lockups.
Yeah,
to
you probably
expire,
get all that
just
out.
make it clean.
Yep.
I did look into this a little bit just to see how Elon Musk is incentivized. He has, I think, a 30% stake in SpaceX and a 20% stake in Tesla. He does get bonuses based on Tesla hitting certain market caps, but right now they're so far away from that, that's not going to happen. So essentially, if you're Elon Musk, you want, in order to have as much pro forma stock as you can following the acquisition, what you want to do is acquire for Tesla for as cheap possible. So maximize your SpaceX stake relative to your Tesla stake.
Yep.
And so I think the more that Tesla goes down,
the more attractive it becomes.
The more attractive it becomes.
Yeah.
So just something to take note of there.
Yeah. Continued march through earnings next week. We got a lot of companies reporting, lots to keep eyes on. We'll also get ISM manufacturing, which I'm interested to see Monday morning. I think that could be from an economic standpoint, everybody's going to be looking at the jobs report. I think the manufacturing story is more compelling at this point.
I think that's a great point. I think that especially, I mean, we got to think about what Kevin Warsh is doing. And what Kevin Warsh has told us is watch the ball, not the ref. And in the past, we've so focused on what is a phony jobs report because we know that the Fed is focused on that.
Mm-hmm.
But he's told us, and not to follow it just because we think that the Fed is following it. Moreover, he didn't even put much stock into the CPI report from last month. So he's not going to put any stock into this jobs report, in which case we need to be looking at what we think are the best data sources out there. And I don't think it's the jobs report. I think it's the ISM manufacturing report. I think it's the ISM services report. And I think it's what companies are reporting in their earnings reports. We've got Costco next week. We've got Fastenal reporting their monthly sales. We've got Caterpillar. And so we've got a number of companies reporting next week that'll shed some light there. And then as you point out, the survey data that we get on Monday is going to be very interesting as well.
Good stuff. All right, we will wrap it up there. We'll be back next week. Y'all have a great weekend. Talk to you soon.